Evening and welcome to today's session. So today we are going to discuss about chapter number 5 further. Okay. In the last session, what we have discussed till now, we have discussed about SA 500, which is audit evidence, which is there on your screen. Then we discussed about about various type of that parameters, various type of things, factors that we need to evaluate of the data that we receive from the management. For example, information produced by the entity or the data that is given by the management expert. We are required to check about management expert, and we discussed a lot of that on a similar part. Then we discussed about SA 501, again audit evidence, but application of audit evidence for specific areas like existence and conditions of inventory, completeness of litigations, and presentation and disclosure of segment part. We discussed that in detail. Then we discuss about the external confirmation, like what is external confirmation basically, how we can do or send external confirmations, what are the things that we need to take care about the external confirmation. For example, when I talk about external confirmation, the most important part is the control of the auditor on the external confirmation process. Now, what do we mean by control, how we need to proceed, types of external confirmation, and management refusals impact, and we also discussed that about impracticability and infeasibility of the performance of any specific procedure. Then we discussed about SA 510. SA 510 was initial audit engagement and opening balances. That if this is an initial audit engagement which was not there for the last year, or it is you are the auditor for the first time. Last year someone was else auditing this particular engagement. For that, what is the criteria, how we need to evaluate the audit evidence, how we need to gather sufficient and appropriate audit evidence. It may be through specific procedures, it may be through procedures that you are performing for the current period. Okay, so by that way you can gather evidence about whether is there any material misstatement in the opening balance that is impacting materially your current year financial number, closing financial numbers. So my target is to check the opening balance to understand whether is there any material misstatement that is impacting my current year closing financial numbers or not. So for that, you may perform a separate procedures. You may perform procedures which are already there for the current period financial numbers. For example, confirmations where you are checking the throughout the transactions or taking confirmation of the transactions, or confirmations where you are confirming the opening balances also, or some different procedure where opening balance is already being covered. So for those areas, no need to perform separate procedures. You can rely on the audit evidence that you have received from those procedures about opening balances. So that we discussed till now in chapter number 5. Any doubt with this? Any doubt till now? Whatever we have discussed in chapter number 5, before I proceed further? No? No issues. Let me then proceed further. Now, today we will be discussing about very interesting topic, that is SA 530 audit sampling. Now, just a quick check from our study material also, what we have covered and what we are going to cover today. So we have covered audit evidence. We have covered SA 501 specific elements or specific considerations. Then we have covered SA 505 external confirmations. We covered SA 510. Now we are going for audit sampling, that is SA 530. Why this particular standard is important? The reason is that throughout the audit, you will be using the sampling techniques for the testing purpose. So whenever we are using sampling techniques, whenever we are using sampling for the purpose of audit, this particular standard helps us to understand how to perform sampling. What are the things that we need to take care when we are doing audit sampling? Okay, it's not like that I need to, let's say for example, I need to pick up 10 samples. I picked up 10 samples, any random, done, dusted, matter over. No, there are things that we need to understand, and there are terms that we need to understand before we can select samples or we do a sampling. Okay, so first I will explain you certain terms, and then we will deep dive into the whole standard. Along with me, I would request everyone to have these notes, prepare these notes, because these notes will help you a day before your exam in doing a quick and efficient revision of the topic. Audit sampling. Now, the first thing I would like to ask everyone, when I talk about sample, okay, audit sample, from where I draw a sample? What is that thing from where I take out a sample? What do I call that particular thing?
Population.
Yes, population. Now, when I'm picking a sample from the population, so this sample comes from population. Population is nothing but the whole entire set of data. Entire set of data from which a sample is selected. Okay. Now, tell me, when I select a particular sample from a population, what is the objective of the auditor when he is selecting the sample? Like, what is the objective to select a sample from the population? Or I'm just selecting any random sample? Or is there any some objective, is there any some target that I need to fulfill when I'm selecting the sample, by selection of the sample? What do you
Each
think? What? Yes.
each unit that is consisting the whole population have equal chance of getting selected for the sample size.
That is a probability, that whether each unit has a chance or not. But what I want to do from, by selecting the samples?
While selecting the samples, I will ensure that the whatever particular transaction or a say unit I have chosen for sample, it would have to represent the whole features that is out there in the population, so that whatever testing procedures I will perform on the sample and the result we would get will give me a more intended audit evidence.
Yes, absolutely correct. So whatever testing I will be performing on the sample, whatever testing I will be performing on that particular sample, that outcome of that testing will give me a reasonable basis to draw conclusion on the entire population. So the testing on the sample can be, used to draw conclusion on the entire population. Remember that. So my testing on sample, once I will test this sample, testing of sample will help me to draw conclusions on the entire or about the entire set of population. Okay. Now, basically, there are other things that are used, or those terms are used when I select a sample. Okay. So there are terminologies that I use when I'm selecting a particular sample, but I will explain that with a practical example so that you guys can understand what and how we actually put that particular sampling methodology or sampling basis when we are actually selecting a sample size. Okay. So I will explain with an example. This one I will explain with an example. Just a minute. Now, let's say there are 1,000 invoices of rupees, let's say 20 crores, that auditor wants to test by drawing the samples out of the population. Okay. Now this is the population of 1,000 invoices. Now what invoices I'm talking about? I'm talking about expense or purchase invoices over here. These are expense or purchase invoice. Okay. 1,000 invoices are there, total of 20 CR. Now auditor wants to test by drawing samples out of the population. Now kindly help the auditor in order to draw appropriate samples. Now my first question here is that how samples are to be selected. Now you tell me, how do you select a sample? If I ask you, okay, out of the 1,000 invoices, select 10 samples, how will you select?
Probably based on the amount of invoices having a materiality level references.
Okay, but let's say I want to select 10 samples out of this. How would you select? Like on materiality basis or like top 10 or what?
Size and characteristics of population is the basis for selection of a sample, and
Okay.
and they how they deviate or misstatement uh, with respect to sample, uh, also need to check. That
Hmm.
means if amount and any transaction which is required to which is shows as misstate uh,
Hmm.
is the basis for the sampling unit that shows every unit selection of each unit in the sample.
Okay. Good. Okay.
Sir, I don't know it is right or not, but there are some methods for sampling,
Yes.
like random sampling. In that, we pick randomly the samples. Uh, if I want 10 samples, I would pick randomly, and some systematic method also, that
Hmm.
first I will divide 50-50 in the numbers, then first 50 I will pick. This type we can do the sampling, sir.
Yes. Good. Yes.
Sir, probability theory, right? Used for the sampling selection.
You can use probability also, like those are. So here the thing is that there is no one method. Okay, now let's understand. The question was to understand the method. So how samples are selected? Samples are selected basically method, based on methods. There are many methods.
Yes, sir.
Samples are selected based on methods. Now these are, for example, your random selection. You can do a random selection also, or you can do a systematic selection that you were talking about, like from the first 50, each 50th, or out of first 50, the first two, something like that. So systematic selection is there. Then you have a monetary unit sampling, where you assign weights on each sample size. For example, it may be value based, it may be probability based. So monetary uniting is one of the method that is there. Unit sampling. Haphazard selection, basically it is kind of a method where there is nothing much technique used, but unconsciously or consciously, without any biasness, they select the samples. Okay, that's why its a name is a haphazard sampling or haphazard selection. Usually this method is used very less.
Sir, can you repeat haphazard selection?
So haphazard selection means selection without any technique. Just I selected any 10.
Okay, sir. Actually, your voice is not properly reached to me. That's why.
Okay. Maybe I select all the 10 samples from just first 20. Haphazard selection. There is no technique or nothing I applied. Without any structured technique, I selected the samples. That is a haphazard selection. Okay. Then there is a block selection. Okay. Now block can be of various similar items or similar characteristics. So block selection can be there. I can divide populations into the block, or some people may say stratification. Okay, so I may select a whole block or stratification or something like that. So block selections is there. So by this way I can select the sample. Okay, so these are the methods that are used basically to select the samples. Now let's say, for example, this particular example, do you think you have sufficient information to select the sample?
So
In this
more
example, you have 1000 invoices, you have 20 crores of total value of the invoices. Do you think you have sufficient information to select the sample?
No, sir.
And what is the missing part?
Basis of selection, like what the purpose here, and what the size here, and the chances of any misstatement, like risk of any misstatement.
Okay. Very good. Anyone else would like to add something more?
I would also want to know the nature of purchase transaction that are happening there in the entity. Like it is inventory purchases or any capital intensive purchases are there for property, plant, equipment. Then my population selection will be different. I would convert it into different stratas, and then I would choose the invoices for sampling.
Okay.
Sir, only population is given, total number of population given, but the unit size and the structure of unit, here is not anything mentioned in this question.
Sir, we
Yes.
will also consider the dates of the invoices, whether they are relevant to the relevant to our audit or not. This year or any previous year invoices are there.
Okay, good. Yes. Anything further you think should be there? Anything further? Okay. Now, let's say, for example, over here, let's say, for example, uh, this particular case is there 10,000, 1,000 invoices of 20 crores. Now, I would like to, let's say, select the samples out of this. Now, I'll tell you what is the missing information that should be there for me to select the samples. Number one. Now, as you correctly pointed out, the purpose of testing is something that should be available for me. So, missing information is purpose of testing. Why I want to select the samples? What is the purpose of testing? So, accordingly, I would select the samples, and the sample selection method will depend on that. Okay. Number two is the risk assessment. What is the risk that I have decided for this particular area? What is the risk that I feel that is this there for this particular area? Now, why risk assessment? Because based on the risk assessment, I will decide an amount which is kind of, you can say, I expect that will be a misstatement, or I can tolerate this level of misstatement. Third, what is the evidence obtained by test of controls, or you can say reliance on test of controls? Before I proceed to select a sample, I need to understand what information already I have by test of controls. Like, if I already have a good reliance on the test of control, do I need to test that many samples when I'm selecting the samples for test of details?
No, sir.
So, understanding what is the reliance that I've placed when I was doing test of controls, or how much or what, whether the controls are effective or not, that is a very, very important part. Then the next part is materiality. Specifically, if I talk about performance materiality. So, what is the performance materiality in this scenario? Or the materiality allocated to this particular segment of expense or purchases? Is 20 CR material enough? Let's say, for example, if I talk about revenue of the company is 2000 CR, materiality is 50 CR, I could say that this is below materiality. If there is a misstatement, still that will be below materiality. So what is the materiality or performance materiality that is in the picture? Based on this, I would be able to decide whether I need to test more samples. Is this a material area to the whole financial statement or not? Or, I may allocate a small portion of the materiality, that is a performance materiality, to this particular area to decide whether this is material or not. Okay, so these are certain things that I need to have, or I should have, before I select a sample. Otherwise, I would not be able to select a sample. Any doubt? Any doubt with respect to the information that I need to select the samples? No? Okay. From here, we would understand, okay, we would understand few more important terms that I just now discussed. One is the expected deviation, expected rate of misstatement, number one, and second is a tolerable misstatement. So first, tolerable misstatement. Can anyone tell me what is tolerable misstatement? Anyone? What is tolerable misstatement?
Sir, rounding off error kind of things is tolerable misstatement, or we can say something is allowed by entity or management that is like कुछ 100 या 1000 या कुछ value like 1% of the transaction is tolerable kind of mistake.
Okay.
So it is a kind of misstatement which is not affecting my overall financial reporting. So at a somewhat level which is more irrelevant or at the level that has been selected to be tolerable. If the misstatement is up to this level, then we can ignore it, not taking it so serious or significant.
Okay. Good. Anyone else would like to add? Okay. So basically, yes.
If there are in the financial statement, I think if during the audit any error or misstatement going and it is not so much material and pervasive, and auditor then also think that it can be okay, then it also can be tolerable misstatement.
Yes. Okay. So you are correct. So I would explain this in a way simple. So you might have seen train tracks, railway tracks. Okay. There's a gap between two railway tracks, small gap between two railway tracks. That is kept for the expansion and contraction in the heat and cold, whatever. Okay.
Yes.
We are not going in the science, but there is a gap. So they expect that there will be increase or decrease in that particular size, this side or that side. Tolerable misstatement is a similar thing. Tolerable misstatement is something that I expect that it is there or it will be there. I can, if there is this much increase, fine for me. I can tolerate perfectly fine. I have kept that room for the inaccuracies. And after that also, if that is something, fills up the gap, perfectly fine. It is not going to harm my financial statement. Still, my financial statement will give me a true and fair view. Okay. So it is that particular gap that if something gets bigger or smaller in case of a railway track, I'm fine with that. It is not going to just disturb the whole track. Perfectly fine. That is a tolerable misstatement. So basically, a level of misstatement which I can tolerate, and after having that misstatement, still I can say my financial statements are perfectly fine. They give me a true and fair view. In a simpler terms, I'm talking about. So this is nothing but a monetary amount. A monetary amount which is set by the auditor. Okay, in respect of a particular level of assurance that auditor wants to seek. Okay, for a particular level of assurance,
Sir, whatever you are writing, I think it is not visible over here. Now
not
visible.
visible.
Now visible, sir.
Okay, yeah. So for a particular level of assurance, okay, that auditor is seeking, that auditor seeks and that the monetary amount will not exceed, this monetary amount will not exceed by the misstatement in the population, or in other words, that the misstatement will not exceed this monetary limit. A monetary amount set by the auditor for a particular level of assurance that auditor seeks, and the misstatement will not exceed by the amount set. Okay, so that is a tolerable misstatement. Means I set a amount which I can tolerate, because this is the level of assurance I need, and for that I can tolerate this much amount. So that is a tolerable rate of misstatement. Now we have already discussed one particular term. I will not discuss again, but we have already discussed this part. Tolerable rate of deviation. Can anyone tell me what is this? Tolerable rate of deviation.
If I assume something or estimate something and the actual results are far away from it or near about the degree of a deviation in that estimate and the actual result is the deviation, and if it is a tolerable rate, like earlier tolerable misstatement was in terms of rupees, but a tolerable rate is in kind of percentage.
Okay. So you are just saying, if I convert the misstatement amount into the percentage, it will become tolerable rate of deviation. Is it so?
So the tolerable misstatement in kind of in terms of rupees divided by total expected misstatement that can be there in the financial reporting, which will that will give me the tolerable rate of that deviation.
Okay. Okay. Anyone else? Anyone? Okay. So the difference between both is with respect to the testing. When I talk about tolerable misstatement, I'm talking about when I do a test of details. When I'm doing a test of details, at that time I use tolerable misstatement. But when I use, or when I do a test of controls, at that point in time I use tolerable rate of deviation. So for test of controls, it is tolerable rate of deviations. For the test of details, it is tolerable misstatement. So that is the difference between both of them. Okay. So when I'm doing a control testing, at that point in time, I set a rate of deviation. And when I'm doing the audit sampling for the test of details, I I set a monetary amount. Now, can someone tell me why I have a rate at the time of test of controls and a monetary amount at the test of details? Why can't I have a monetary amount at the time of control also? Why do I have a rate?
Sir, I think in test of control, it is related to operating efficiency and effectiveness, and related to internal control. And the test of details are related to the financial statement or the document. Uh, uh, that's why the terms are related to this.
Okay, good. Anyone else would like to add something more?
When the misstatement is of relating to the financial statement level, which is can be expressed in terms of rupees, we said that it is tolerable misstatement level. But in kind of controls, which is internal control, we when we say that the controls are not efficient or deficient, which is actually its quality, which cannot be expressed specifically in terms of money. So we would prefer to have a rate of deviation, that is deviation or deficiencies in controls.
Absolutely correct. Yes. When I'm doing a test of controls, I am actually verifying the design and operating effectiveness of the control. Now, when I check the operative effectiveness, within one example, I will explain. Okay. Let's say there was a control that each and every check that has been issued by the company has to be reviewed by 2%. Each and every manual check that we present in the bank issued by the company has to be reviewed by 2 key personals. So a check of rupees 1 lakh was issued by company where instead of 2 key personals, only one personal or only one person basically reviewed the check. Now, this isn't failure. This is a deviation in terms of controls. Now, would you call this as a deviation of rupees 1 lakh? Answer is no. This is not a deviation of rupees 1 lakh. Rather, the whole sample is a deviation. The control was not followed. So I cannot say here that 1 lakh rupees is a misstatement. That will be incorrect. I cannot say this 1 lakh is a misstatement. It is incorrect because there is no problem in the 1 lakh. Problem is with the control that 2 people were supposed to review, only 1 person reviews. Now, because of that, the control is not operating effectively. So there is a deviation in it. So when I will check the deviation, when I say, let's say, for example, I need 95% confidence, means 5% deviation is something allowed. So I'm saying that 5% of the sample out of the total population, I'm expecting that it may go wrong. They might not operate effectively. That's why we have a rate of deviation when it comes to test of control, and we have a amount, a monetary amount when it comes to the test of details. Clear? Any doubt? Simple example, if I summarize in a simple terms, very simple. You drive a car, okay? Now, if you drive a car on the road, that is a control operating fine. Like that, there is a path where the control was supposed to work, it is working on that particular part. The moment you drive a car just below the road on some on some ground which is not the road, just below the road or on the side of the road, let's say footpath or whatever it is. So you are driving the car off the track. That is the path which was there. You are not driving the car on that, but it is running somewhere else, but it is still running. Now, if the car hits something, if the car gets damaged or something like that because of running off the track, that is the misstatement in the monetary terms. But just running off the road is not a misstatement. It's not a damage that the car will suffer. It is the car not following the road. So this is a qualitative aspect that we are talking about. How much time the car was on the road, how much time car was off the road. But because being off the road, how much damage is being done to the car is the monetary amount which we do or check in the test of details. So this is the difference between tolerable misstatement and tolerable rate of deviation. And one last and very important point I just want to discuss is sampling risk. Can anyone explain me what is this sampling risk?
The conclusion that I would get by doing this sampling procedure will not give me a sufficient and appropriate say basis for my opinion to be backed by.
Okay, good. So what kind of sampling risk are there? Or what kind of errors can be there because of the sampling risk?
Sometimes I may choose say invoices. If we talk about invoices, I may choose invoices where no misstatement I could be identified during this sampling process, and still some invoices which is actually subject to the misstatements I may miss out during the sampling.
Yes. Yes. So basically, when I talk about sampling risk, is the risk that auditor's conclusion is different or may become different or maybe is maybe different from the conclusion if the entire population was tested. For example, let's say in this scenario, 1000 invoices. Let's say I decided to test these 1000 invoices. Okay. And let's say I decided to calculate the number of samples I will test. So I applied the statistical formula. Okay. The confidence level, the expected misstatement, let's say of 2 lakh rupees, performance materiality of 10 lakh, acceptable level of misstatement of 95% or confidence levels of 95%, everything like this. So I calculated by using that statistical formula. I calculated, okay, let's say sample to be tested is 65. Samples to be tested is 65. So after testing 65, let's say if I do not identify and I used random sampling, random selection to select the samples, random selection method to select the samples. Now, after selecting and testing 65 samples, out of the 1000, I did not identify any observation. And unfortunately, only those 65 were the correct. Rest 1000 minus 65, whatever samples were there, okay, they were samples where there was a misstatement. So let's say 935 samples, or you can say out of these 1000, in 900 there was a misstatement. Let's say in 100 they were fine, and unfortunately my 65 came out of this 100 only. Do you think by testing these 65 and saying there is no issue in the entire population is the correct outcome? So 1000 invoices, 900 were incorrect, 100 were correct. When I selected 65 samples, they came out of the, I don't know how, but they somehow came out of that 100 only. And I concluded that the population is perfectly fine. There is no misstatement. Now, do you think the outcome which I got from those from testing those 65 samples is correct?
No.
Yes, it is not correct, because majority of the samples are having misstatement. Only few, that is a 10% samples, were not having misstatement. But out of that 10%, when you selected the sample, your sample came out of only that 10%. Means your sample is not representing the entire population. But I applied the statistical formula, and let's say I applied the random selection and statistical formula to get the 65 number and the random selection. So I got the random selection, and I did everything which was supposed to be done. That's why it is known as a risk, that even after following all the things, there is a risk that the auditor's conclusion about the population, okay, auditor's conclusion about the population based on the sample, based on a sample, may be different. So the auditor's conclusion can be different or may be different about the population based on the sample. Okay, and that you will come to know if the entire population was subject to the same procedure. If I test 1000 invoices, if I completely test 1000 invoices, full testing, and what conclusion I get, like after testing 1000 and the conclusion I got after testing those 65, if both are different, means there is a sampling risk. So in a nutshell, if conclusion after testing 1000 invoices is not equal to conclusion after testing 65 samples, then that is equal to, this particular scenario is equal to your sampling risk. Clear with the sampling risk? Any doubt? Now, because of the sampling risk, there could be two things. One, I may call that controls are more effective. Or in case of a test of details, I may call that misstatement is not there, but in actual there is a misstatement. Okay, so there could be two scenarios. One I call, and it's the first one is very, very critical. If you have that first one, means that is very, very critical. The first one is false positive. I call it false positive. Reason, because you get a positive that okay, everything is fine, there is no material misstatement, controls are working fine, but in actual the scenario is totally opposite. Okay, so in this case, you conclude, auditor conclude that FS or population is free from material misstatement, okay, but actual is opposite. Very, very critical. Because here you are giving an opinion saying there is no material misstatement, but it goes to your audit risk, audit opinion risk, that your opinion is incorrect. However, the second one is less risky, which is known as a false negative. That you got the outcome that there is a misstatement, used misstatement, that there is controls that are not operating effectively, but in actual it's the opposite. This lead to audit efficiency issues. Means, let's say today you identify, like, by testing 10 samples, that there is every sample failed. You will say entire population is failing, means my 10 out of 10 samples are failed, entire population is failing. And you then decide, no, I need to do further testing in this area. High risk of material misstatement, significant risk, test everything. Then you tested 1,000 samples and you came to know that only those 10 were failing. So this kind of scenario leads to audit inefficiency. Means you end up testing more when it was not required. Okay, so here auditor concludes that population contains material misstatement, but actual is opposite. In second one, still it will be impacted on the audit efficiency, but still you will be able to give a correct opinion. After testing further, after understanding everything, you will be able to give the correct opinion. But in the first one, it's very risky because you never identified there was a misstatement. Means your opinion is incorrect. This is more critical and harmful case, false positive, than the false negative one. Clear? Any doubt? Any doubt?
Sir, this false negative में आपने लिखा है कि that auditor concludes the population contains material misstatement. Is it only population, or say the financial statement also contains material misstatement?
Population or financial statement, because population will again go into the financial statement. So if I say population contains misstatement, indirectly I'm saying there is a misstatement in the financial statement.
Okay. That means audit risk को भी हम यही कहते हैं कि हम जो opinion दे रहे हैं वो actual में जो है opposite है. We are giving wrong opinion.
But when you identify a misstatement, you do not stop over there. You go and test further. Correct? So let's say, for example, I identified a misstatement of rupees 20 lakhs. Will I stop there? Answer is no. I will test further in that area. And let's say after digging up, I identified there is no further misstatement. What I will do is I will take up that 20 lakhs because that is an actual misstatement I have identified. But earlier my assumption was I have identified 20 lakhs and there could be much more. Now I have only 20 lakhs misstatement that I identified initially. And I will take that's 20 lakhs. I will compare it with the materiality and give my opinion. Which is the correct?
Yes, sir. Clear.
So in false negative, what you do is you end up doing more testing, but whatever you identified at the first stage was correct only. Just you are ending, you are doing a lot of testing because you think there is much more inside or much more to dig. Any further doubt, guys? Any doubts to this one? Okay. No doubts? Okay. Let us proceed with a question so that we can understand the topic in much more detail. Let's discuss some questions on this particular topic. Let me pull up the questions. So this is again, some examples, some detailed questions, a case scenario based, but it's good. It will give us a good understanding of the topic. Okay. So this is one process that here that is mentioned. Like Mr. Ishan is the audit manager of the audit of Best Works Private Limited. He has performed the below risk assessment for the vendor payment process. So these are certain processes for which the risk assessment has been performed. Vendor payment one, like incorrect vendor payment, this is the risk assessment says high, medium, and low. Okay, this is a control description. We'll not go as of now in the control description, but this is a control description. So 4 processes are there pertaining to vendor payments and accounts payable. Now during testing, control over excess payment to vendor, this one, the last one, excess payment to vendor, which was low, risk assessment was low. Mr. Ishan identified that out of 25 recurring manual control with a population more than 365, okay, Mr. Ishan identified that out of 25 samples picked for the testing, in 2 instances, the invoice process executive missed adjusting the advance of 2.5 lakhs in total, standing against the invoice due for the payment. So they missed adjusting the advance of 2.5 lakhs. The same was also not identified during the independent reviewer's review of the advance list. And the expected rate of deviation for this control was 0. No deviation was expected. That no deviation should be found. If found, means control is not working effectively. During test of control over risk of unauthorized vendor payment process. Unauthorized vendor payment process is the second one, where the risk is medium. Mr. Ishan identified that out of 25 samples tested for authorization, in 3 instances, the authorization from the vendor master team was obtained after processing of pay runs. Like delayed approvals were there. However, approval from independent reviewer was obtained prior processing of the pay runs. Now the control is basically that before uploading the pay run into the bank site, vendor master team needs to verify, and then they need to process the payment with the independent reviewer, with independent reviewer's approval. So there are 2 approvals required. So one was obtained late and another was obtained on time. During the test of yes.
Sir, the content that you were reading from the table was of the ultimate vendor payment process, sir. And right now the point is about unauthorized vendor payment, which is second one.
No, actually the thing is, this is untimely vendor payment process, the control description, and then is the unauthorized vendor payment process. But they both are, everything is linked to one process only, that is vendor payments. These are the different risks within the same process. So this is the same process basically you have over here.
Okay, sir.
So when I talk about this, this is only one process, vendor payments. It is just divided into various parts, but it's the same process, one by one, step by step. You can say this is a step 1, step 2, step 3, step 4, like this way. Okay. So instead of here having 2 approvals, one was obtained late and another was obtained on time. During the test of control over risk of unauthorized vendor payment processed, Mr. Ishan performed interim testing for 9 months by selecting 20 samples of parents and tested for the relevant control attributes. No errors or deviations were identified in testing. So he tested for 9 months population by selecting 20 samples. He is talking about unauthorized vendor payment process. The third one. Okay. So all parents prepared by the will be approved by the vendor master team and independent reviewers before being processed for the payment. Again, two approval system. Okay. Now, first question. After projecting the misstatement for the deviation identified in the control, Mr. Ishan observed that the total projected misstatement is below tolerable rate of deviation. Hence, Mr. Ishan concluded that the control is operating effectively. Mr. Manoj, the audit manager, has a different opinion. Kindly guide both in respect of the identified misstatement in the test of controls. Let's don't go, as of now, we'll not go to the options. But you tell me, Mr. Ishan is saying the projected misstatement is below tolerable rate of deviation because he projected the misstatement and he's saying control is working fine. Mr. Manoj, the audit manager, has a different opinion. Read the question, take a minute, and then try to answer.
But sir, here is a question mentioned that control are less effective than actual. No? Means audit efficiency is hampered, and he need to do additional procedure and he need to do additional sample for conclusion.
Okay. So here Mr. Manoj is saying that it is not operating effectively. But Mr. Ishan is saying it is operating effectively. Who is correct?
Mr. Manoj.
Why not Ishan?
So, as we read above information, we are coming across that the controls that are there around this vendor payment or account is not actually the way that are designed. They are not followed in actual. So there is a deviation, and they are saying that the tolerable rate से भी below है. And in one line above somewhere I read that it is at 0.
Yes, the tolerable rate of misstatement, expected rate of deviation was 0.
So it is also not correct.
Okay, good, very good. Absolutely correct. Now, in some cases, it was expected, the expected rate of deviation was 0. Plus, when I have a misstatement in control, I have again, said that when I have a misstatement in control, am I required to project that misstatement to the entire population to calculate the total projected misstatement? Answer is no.
No.
You are not required to project the misstatement, because projecting the misstatement is like, projecting the amount. I am not talking about the amount. Amount is not relevant for me when it comes to the control. So projecting the misstatement is an incorrect method for the control testing. That's why Mr. Ishan, after projecting the misstatement, if he concluded that that is below the tolerable rate of deviation, it is incorrect. And Mr. Manoj, who has a different opinion, he is correct. Because here the controls are involved, I just only compare the deviation with the rate of deviation. When it comes to test of control, actual deviation, compare it with the rate of deviation. That's it, matter over. So if my expected rate of deviation was 0, means I was not expecting any deviation to be found in this control. And if I get a deviation, for me, the control is not working effectively. Straightforward, simple. no projection is required to be done. Like, okay, out of 25 samples, I identified one failure. So out of 365, how many? Then I will divide it by 365 and all that stuff. No, not required. Okay, so here Mr. Ishan is incorrect because he's projecting the misstatement, which is not required to be done. Straightforward. Any doubt with this?
Sir, one thing is for 25 samples, the authorized payment, unauthorized payment is a question of effectiveness, right?
Yes, everything is a test of control over here. Test of control, test of control, test of control.
The above one is 25 out of 365 is auditor is not efficiently work here, like divide by 365 and error rate is multiplied by जो error rate आई है, right?
I'm not able to understand the question. So what is the
Sir,
question?
सर सर मेरा क्वेश्चन ये है कि अभी जो ऊपर वाला टेस्ट ऑफ कंट्रोल है 25 वाला, उसमें सिंपली उसने प्रपोर्शनेट करके टोटल नंबर ऑफ एरर्स दिखा दिए, एंड जो नीचे वाला जो अनऑथराइज्ड वेंडर पेमेंट है उसमें उसकी इफेक्टिवनेस पे प्रॉब्लम है, उसने इफेक्टिवली उस ऑडिट को करा नहीं है, एंड ऊपर जो है एफिशिएंट नहीं था उस ऑडिट में. दैट इज द बोथ द क्वेश्चन ना, इफेक्टिवनेस एंड एफिशिएंसी. That's my question.
So absolutely correct. So when he is doing proportion projection, like out of 365, if I get a one failure out of 25, then how many out of 365, something like that. A projection done in the test of control is not required. It's not allowed. Only projections are required to be done for the test of details. Okay. So
Okay, sir.
projection for the test of controls is not appropriate. That is explicitly said that, for test of controls, no explicit projection of deviation is necessary, since the sample deviation rate is also a projected rate of deviation. For example, if I get one sample failure out of 25, okay, and my control expected rate of deviation was 0, means I should not identify any deviation by testing 25. Both are not matching. Straight
Yes.
away, I can say the control is not operating effectively. No need to project.
Yes,
Same in the below to 1, he has to apply the same concept. Whatever my expected rate of deviation was there, after testing the samples of 25, if I identify 3 instances or whatever instances, so what was my expected rate of deviation against what I have identified the deviation, I need to just compare these two things, nothing else.
Okay, sir.
Any doubt? Any doubt on this? No? Okay. Now, another thing, another question, which is very good one on the similar lines. Assuming the adjustment of advance against the due invoices selected in the parent was an automated control, kindly guide Mr. Ishan with respect to the testing of automated control. Now, somewhere or other, we have already seen this particular part. Not in this particular standard, but we have already seen in one another standard in the previous sessions that how to test an automated control. or what is an automated control, or what are the things we need to test when we are going for the automated control. So you need to tell me how the automated controls are required to be tested. Simple. Anyone? If I assume that the advances adjusted against the due invoices was an automated control, kindly guide Mr. Ishan with respect to testing of automated control. What are the things that Mr. Ishan should take care when he is testing the automated controls? Come on, guys.
Sir, I think we should check whether the transaction which are entered in the computer are properly entered or not, and whether the program or software whichever is working over there is working properly or not. Uh, uh, Actually it is any effectively work कर रहा है कि नहीं वो program.
Okay. Yes, you are correct. Yes. Yes, go ahead.
सर एक्चुअली मुझे वर्ड नहीं मिल रहा.
The same one which we discussed in ITGC control, right? Authorizations or something like that, right?
Yes. But how will you write the answer? Like, if this is the question in the exam, how will you write the answer?
Sir, then we will also check now whether like Pooja said, the whether any authorized person done the work properly, and when the work done, and this program or software has a password protected or not, and this password must have only to that person only who is working over there, and not all the uh, all the personnel have the same. This information we will check.
Yes. Good, very good. Anyone else?
We will also check how the automated control is actually processing such invoices, like input processing and output, that logic that has been followed by the automated control. We will check by having just testing one any data from start beginning to end, and we will analyze whether the expected result that we were expecting is the same as the process is producing after that going through that control.
Okay, good.
Sir, backup and recovery is also the point where we check the system is taking backup for the timely basis, and the data privacy is also second point, and third is uh, password protection, which need to be very important when ITGS controls are checked. The person who the authorized person can access can alone access his um sir his system, and third one is sir network security, like firewall and all that thing.
Yes. Okay. Yes. So basically, yes, Pooja.
Sir, in case we are testing any manual control, the results that we get are very high level of suspicious because there is human intervention. But as compared to this automated controls, there is very less human interactions. So the test of controls are giving probably the high level of reliance. So indicating that test of details would be very low for this.
Okay. Yes.
Sir, but here here, sir, here is one risk also. The process, the automated process has some duplication work and automatically do the transaction without any intervention. So there is so a big risk in the kind of transactions.
That's why we are checking that automated control, whether it is appropriately and efficiently operating or not. We have to check it
Yes,
first.
sir.
Yes.
Yes, sir.
Basically, you all are correct. That is the correct one. Now we need to also understand when we are writing for exam, what we can write. There is 10 number of things that you told me that is there, but can you write all that thing in the exam within the given time frame? So answer, we need to also understand how to write answer in the exam. That is a very important part, because at times, we are aware what should be there, what all things should be there for the testing purpose, how to test an automatic control. But when it comes to the writing, we might lose that flow, we might lose the words, we might lose the way to write the answer. And that's where a lot of students face struggle, that okay, we know from inside that this is the answer, but we don't know how to write. Now, the simple thing over here is, when I'm talking about any answer, let's say it's answer based on the standard, you should start by quoting the standard and its name. Can anyone tell me which standard you would prefer over here?
Sir, SA 330, test of controls.
Name of the standard?
Audit,
So, yes.
Auditor's responses to assessed
Assess risk. Yes. So you are correct. I will start as per SA 330, the auditor's response to the assessed risk. Okay. Requires this thing, that requires that the extent or how an automated control is expected to function. Okay. Unless there's a change in the program or there's a change in the tables, files, how I need to test, and then what is the requirement of SA 330? You explain that. Then you correlate in this particular scenario, and then you provide a conclusion. So we'll see the answer. So as per SA 330, because there is an inherent consistency in the IT processing, it may not be necessary to increase the extent of testing of an automated control. This is very important. So automated controls are working on a similar line. For example, if that particular control is processing an invoice in a particular way, he will process all the invoices in that particular way based on the logic. So once you test the logic, it is similar for all the invoices. You are not required to test 25, 50, 100 samples to validate the logic. One sample testing will be equivalent to n number of testing, because the logic has not changed till the time the logic has not changed. So because of that consistency in the IT processing, it may not be necessary to increase the extent of the testing of an automated control. An automated control can be expected to function consistently unless the program is changed, which includes the tables, files, or other permanent data that is used by the program. Once the auditor determines the automated control is functioning as intended, okay, the auditor may consider performing tests to determine the control continues to function effectively. Now, when I will say that control is working effectively, when either it is implemented or when it is tested. If I'm testing it some other date apart from implementation date, it may happen that the control was implemented last year. I'm testing in the current year because I need to test. So I'm saying that control is functioning intended perfectly fine. Okay, so I can rely on the control provided I need to perform some other testings. I need to perform some other testings apart the testing on the control. That is, changes to the program are not made without subject to the appropriate program change controls. The authorized version of the program is used for processing the transaction. Other relevant IT general controls are effective. If these things are there, your control is functioning as intended, your control's logic is intended, that is the thing that you need to do. Testing is done. So such test might include determining the changes to the program had not been made, as the case entity used the package software applications without modifying them. For example, standard ERP. If someone is using standard ERP, so you may check whether is there any change in the standard ERP or it is functioning in the standard way, whatever logic was there. So if you do this testing, done. Nothing further required. This is how you should answer the question.
It's
Clear?
totally different, which we give you.
See, no, but if you see, most of you answered like, about the program changes, about the firewall, about data privacy, backup, everything is there. But that is part of this IT general controls. Here, part of this. Now, when I can write the same thing within a one line, why to elongate that particular answer, by breaking it into multiple sections? I can just whether other relevant ITGC controls are effective or not. It will cover everything. So you guys were just providing me breakup of ITGC controls and other controls that are there. But in actual, I can just write in a one word, one particular sentence or one particular line, which is appropriate for the reader also or examiner also.
Sir, I have one question also. So change to program are not made without being subject to the appropriate program change control.
Yeah.
Sir, with respect to invoice, how can we check that point?
See, it is not with respect to the invoice, it is respect to the program. Now, let's say you check the control that it is applying the advances appropriately in one sample. Okay, then now what I will do is I will go and check whether any change to the program means that program which applies the advances against the invoice, whether there is any change in the program which is being performed. If yes, then whether that change was made as per the appropriate program change control, or are there any program change control around? Like, tomorrow if someone changes the logic, like only adjust the advance if that is more than 10,000 rupees. So it will not adjust the advance below 10,000 rupees. So that program change is subject to the program change controls. If that is there, then it is fine.
Okay.
Any doubts, any questions? Okay, if no further questions, I would take up one more question over here, which is not onto this particular topic, but related to and what we have seen in the last session. Okay, so one question again could be related to the last session. It's a mix of whatever we have learned till now. While planning the roll forward testing, Mr. Ishan was of the view that he needs to test full sample size again at the period end as in control testing, and no reliance can be placed on the testing performed at the interim period. Kindly guide Mr. Ishan with respect to the reliance that can be placed on control testing performed at interim period. So earlier what he did is, while doing the testing, he only tested for the 9 months. Over here, if you see, interim testing for the 9 months by selecting 20 samples. So samples were selected. They were 20, not full sample size for the 9 months. Now, what is the question over here is that Mr. Ishan is saying, no, I need to test full sample again. For the entire year, no reliance can be placed on the testing performed at the entering period. Kindly guide Mr. Ishan with respect to the reliance that can be placed on the control testing performed at the interim period. We have already seen this particular part, discussed multiple times. Come on, guys. How or what are the things that you need to take care or you need to understand before you can decide that whether the reliance can be placed on the interim testing or not? What factors will you consider when you need to place a reliance on the interim testing?
When the interim report or interim test is passed in TOD on TOC.
TOC. The question as of now, it is on TOC. Or let's say we are talking about TOC only as of now.
If the controls are not appropriate or effectively designed at the time of interim report, Mr. Ishan does not rely that controls, and he must do all the testing from the beginning to the end.
Okay. But if I show you the earlier question where he tested the controls, just a minute. Yeah. So interim testing for the 9 months, and there were basically no errors or deviations identified while testing for the 9 months. Everything was fine.
Sir, but here the controls are not appropriately tested by the Mr. Vishan, and he performed only 9-month basis controls.
Okay.
Something might change in the next 3 months, so he have to perform all the tasks, all the
Testing, basically. All the checks and all the testing again.
Yes, sir.
Okay. Anyone else with a different answer or something further to add? Vignesh, Usha, I never hear from you. So any further thing you would like to add? No? Okay.
So this is also related with 330 essay.
Yes. Yes. Okay. So how it goes? When it comes to the reliance on the testing performed at the interim place. So remember when we were discussing about designing the responses. Okay. At that time also we discussed that if we can place reliance, that is perfectly fine. There is no issue in that. But we need to just check few things in order to place the reliance. Number one, what was the outcome when the control was tested at the interim period? We have the thing in the question itself that the outcome was like no errors were identified. There was a reliance on the control. Fine. Number two, is there any change in the process or the control after the interim period? So once the control was tested for the 9 months, now is there any change after that? If change is there, I need to test the control. But if there is no change, the control is operating as it was operating earlier, I may place some reliance on the testing that is performed at the interim period. Okay. But apart from that, what are the things that we need to understand? So one is the evidence about the significant changes in the control subsequent to the interim testing, or additional audit evidence that is required to be obtained for the remaining period, like 3 months in this case, operating effectiveness of the control during interim period, like there were any errors or deviations identified during interim, which in the question itself says no. Apart from that, we need to understand the significance of the assets risk of the material misstatement. What is the level of the risk? Before I can say that I can place reliance, first I need to understand what are the risk assessment level done for this particular control. Number two, is there any specific control, okay, that were tested during the interim period, and after that, there was a change, or there was something more in that particular control which is impacting here also. Okay, so let's say, for example, if there was a control which was changed after the interim period, which has a part to play here. Sometimes output of one control is input of another control. Okay, so if there was a change in the control which is somehow linked here, I would say there's a change over here also. Then we need to understand what changes were there since they were tested. Degree to which the audit evidence about operating effectiveness was obtained earlier. Like, did I test appropriate samples pertaining to the interim period, or did I test only just one sample? Whether the sample testing on the basis of which I'm saying the control was operating effectively in the interim period is appropriate or not. What if I was supposed to test 20 samples, I tested only one? What if I supposed to test 10 samples, I tested only one or two samples, and I'm saying control is operating effectively in the interim? So whether the evidence on the basis of which I'm saying the control was operating effectively in interim is appropriate or not. Length of the remaining period, extent to which auditor intends to reduce the further substantive procedures by placing the reliance, my expected rate of reliance on the control, and the control environment. All these things are there, all the factors are there, okay, based on which I need to decide whether I can place a reliance on the interim testing or not. Clear?
Yes, sir.
So if, let's say, your control was operating effectively at interim, you tested appropriate samples at the interim, there is no change in the control process. Okay, the remaining period of the roll forward testing is less compared to the interim. Means in interim you tested 9 months, now it is only 3 months, which is lesser than the interim. There is no change in the control environment, and overall ITGC controls are working effectively. The supporting controls to this particular control, the supporting process of supporting things to this particular control, there is no change and they are working effectively. There is nothing then which can say me that okay, you shouldn't place the reliance. You are allowed to place the reliance in that case. Clear? Any doubt? Okay, so this was SA 530 plus. We also took some of the more things to discuss from the previous sessions. It's a combination, the question that we saw was a combination of SA 530 and some other aspects, which gives a good recap of what we discussed in the previous session also. So what I suggest now, let's take a quick 10-minute break, try to grasp and try to understand what we discussed till now, and after the 10 minutes we'll continue the session. We'll go through the study material about SA 530 and we'll start the new SA then. Okay, let's take a quick 10-minute break. Hello everyone, welcome back. Let's continue the session and discuss further. So what we'll do is we will go through the module of SA 530 and then we will take up SA 550. Again, this is the standard which is given SA 530 in the module. Okay. So basically you have objective of the auditor with respect to SA 530 audit sampling, that if he decides to use sampling, then he needs to perform statistical or non-statistical sampling procedures. The basically objective is to obtain that auditor to draw conclusions about the population from the sample selected that we discussed. Audit sampling is also that we discussed that auditor wants a reasonable basis to which he wants to draw the conclusion about the entire population by testing the samples. Now, sample size, again, we discussed that sample size. In the past also, we have discussed the sample size that, when we have a higher reliance on the control, we may test less, or when we have a, lesser, risk of material misstatement, we test less. Higher risk of material misstatement, we test more. And you can say higher, risk assessment, but lesser control reliance, again, you may test more. And we discussed that particular part, like how to calculate sample size, like by, expected rate of deviation. There are some factors that we need to consider. So while designing the audit sampling, purpose is something that we need to understand first for what we are testing. Okay, characteristics of population, determine the sample size. Okay, and how, like there are multiple factors, statistical methods, we discuss about the method and selection methods. Then select the items for the sample testing, and each sample unit has an equal chance of selection. Like this is a selection method. Then performing the procedures, you need to perform the audit procedures on those samples. And other considerations. Other considerations is like the auditor shall investigate the nature of the deviation or misstatement to understand the possible effect. If there is a deviation, then check for the deviation, the reason for the deviation. If it is anomaly, now what is anomaly? Anomaly is something like you can say it's a deviation, but it's one of a kind. That is not related to the entire population or not representing the entire population. One of a kind, very small amount, not that much material or not that much relevant, kind of, you can say, which you can ignore. Okay. So when deviation or misstatement is identified and not considered as an anomaly, then you need to perform other procedures to obtain a higher degree of certainty that the entire population is correct. Okay. For test of detail, you need to project misstatement only for test of detail, not for test of control. We have discussed this multiple times. And then auditors shall evaluate the results of sample testing, whether they provide a reasonable basis for the conclusion about the population or not. If not, then you may need to test more. So this is basically your SA 530. Any doubt till now?
Sir, you said
Yes.
that for deciding sampling size, there is a formula. Which formula is there, sir?
So basically that depends upon the sampling method that you are using. For example, simple, there are multiple formulas which can be used to determine the sample size. It's a statistics basically. Okay, the if I talk about simple formulas, basically simple statistical formula, that will be more like, you can say, using of standard rate of deviations, using of standard deviation, population, materiality, expected rate of misstatement, like the confidence level, Z index, and formula based on that one. So basically, when you have a statistical formula for that, just let me see if I have one of the formula for you. I can show you that also. Yeah. Usually this is a statistical formula, may not be relevant for all the testing purposes. One of the example. Okay, one of the example. So how sample size is calculated? Sample size, that is n, is equal to that, or probably more relevant to, near to Z into standard deviation, okay, divide by tolerable misstatement, divide by your performance materiality less expected materiality, okay, and I will convert whole to the square. So one of this formula is there. Okay, so this is how the formula works for sample size calculation. Z into standard deviation divide by performance materiality less expected expected your misstatement. Now Z is the confidence level. Again, you need to use statistical formulas to calculate the value of Z when I have a 90% level of confidence. Then standard deviation based on your professional judgment. Performance materiality, again professional judgment. Then you may have expected rate of misstatement. Let's say based on your understanding of the process, understanding of the scenarios. You may have your past experience, the amount do you expect, and everything like that way. And on the basis of, yes, consider when we do a sample calculation, and we sometimes we use a complex formulas, complex softwares to calculate the sample size.
So can you suggest any areas or examples where we should follow this proper formula for sample size choosing?
Examples, there are not many. Just now, like in our previous question that we said 1,000 purchase and expenses invoices, we will use this formula. And if I talk about big audit firms, everyone, like in my experience, in my journey of 12 to 15 years of audit, everyone uses the formula based softwares to calculate the sample size.
Okay, sir.
If I talk about some names also, if I give you some names, that tools that are there, okay, which are used to calculate the sample size. Just let me, if I have that names. Wait a minute. There are multiple tools available in the market, or like audit softwares. For example, ACL is one of them. Idea is another. Okay, sometimes you have what you can say specific tools designed for specific areas. Okay, basically most of people, if you need any open-ended, then there is a R software, R programming language. In that is a statistical programming language. There are many open-ended softwares based on R that they help in calculating audit sampling with the good formulas and all that stuff. So there are multiple in the market.
Thank you, sir.
Any doubt with SA 530 or any of the expect?
So while going through this SA 530, I was actually referring to the material that is there in ICAI Knowledge Bank, and I have also shared that PDF to you. In that particular,
yes,
on page number 13, there is some reference table is given in Appendix 2, where I am confused in wordings that have been used there.
Wait a minute. Let me open. Just give me a minute. Okay. So you have opened the bare text of the standard. Let me open that also. This is the one?
Yes, sir.
Page number?
13.
So this is the bare text of the standard. Yes. Appendix 2. Okay. So what is
Yes.
the question here?
सर उन्होंने जो फर्स्ट केस दिखाया है उसका जो एक्सप्लेनेशन सामने राइट हैंड पे दिया है उसके वर्डिंग्स में थोड़ा कंफ्यूज हूँ. More assurance auditor intends to obtain from operative effectiveness of control The lower auditor assessment of risk of material misstatement will be?
Okay, I'll tell you. Now, this particular is an example of the factors that influence the sample size. Okay. Now, what it says that we'll just do a first plain reading, sentence by sentence, and then I'll explain. More assurance the auditor intends to obtain from the operative effectiveness means I am placing higher reliance on the control. The lower audit assessment of the risk of material misstatement will be, and the larger the sample size needs to be. Simple that if I need more audit evidence, more assurance on the operating effectiveness. Okay. Now remember when we were testing, when we were preparing that particular table, my risk of material misstatement was decided on the basis of the control risk, inherent risk and the control risk.
Yes, sir.
Now, if I say my control risk is low, means I need to test more control, then only I will be able to say I need, there is a lower control risk.
Yes.
Correct? Now, if I say control risk is low, I need to test more. That is, I am placing higher reliance on the control. Everything is same. What I'm saying is higher reliance on the control. Control risk is low. I need to test more. Higher sample size. Everything is same.
Yes.
That is only written. That larger the sample size needs to be.
Okay,
If
sir.
more assurance you need from the operating effectiveness of the control, means I'm placing higher reliance on the control. I'm expecting low control risk. Now, low control risk will give you low risk of material misstatement, because risk of material misstatement is nothing but a product of control risk and inherent risk. If one is low, another will be low, and you need to need higher sample size.
आई वॉज थिंकिंग कि अगर इफेक्टिवनेस जो है कंट्रोल का अगर ज्यादा है तो व्हाई वुड आई टेक मोर सैंपल साइज?
But here the thing is, what they are talking about, size of the test of the controls, sample size for the test of the controls. They are not talking about TOD, they are talking about TOC. Now, to have a TOC, like to get that I have a reliance on the control or not, first I need to test by selecting the samples. And if I'm saying that I need to place high reliance on the control, I need lower control risk, I need to test more.
Yes, sir, got it.
Any further doubts? Any doubt, guys? No? Okay. If no further doubt, that was your essay 530. The next essay that we are going to discuss is essay 550, related parties. Okay. Very, very important essay, I would say. Very important. Because in most of the cases, in most of the audits, hardly there will be any audit where you won't have related party transaction. Okay. So related party, essay 550 is very important to understand. Okay. Now, we need to understand few things over here. First of all, when I talk about related parties, okay, what is related party? Who is the related party? So I need to understand what is the related party mean. Can anyone tell me what is the related party mean over here?
Sir, has a significant control or influences on the entity,
Yes.
directly or indirectly, like a common controlling ownership and family members.
Okay. Anyone else? You can give the answer of this question just in one line also. What is a related party as per SA 550?
But defined in FRF.
Absolutely correct. So, because now I may apply this SA 550 at multiple places. Not only audit of a company, it may be applied at the audit of bank, audit of insurance company, and the FRF for those particular entities will be different. They may have an additional definition of related party in some insurance act, in SEBI regulations or RBI regulations, or I don't know, like depend upon case to case basis. Banking Regulation Act. So if there could be multiple definitions of the related party, how can I define the same in one word or one definition in the standard? It's better to leave to the applicable financial reporting framework. So related party means a related party defined in the FRF. So when I say related parties, this should be as per my financial reporting framework, applicable financial reporting framework. Now, there could be one question. What if financial reporting framework doesn't have a definition of related party?
So then tax significant control over the entity.
Yes. Then standard says that what is a related party. So if FRF is silent, FRF has not specified any definition of related party, then you can go on the significant influence directly or indirectly through one or more intermediaries of over reporting entity, or control, or having common control, common ownership, and all that stuff that which is there. Okay. So if FRF specifies, fine. If not present in FRF, then you may have a definition as per standard or explanation as per standard, which says that where the application, where the FRF is silent, it says that a person or entity that has this control or significant influence. So it uses the term control or significant influence. Over the reporting end, over the entity. Okay. Or it may be directly, indirectly through one or more intermediaries, but it talks about the control and significant influence. Okay. It may be another entity over which the reporting entity has a control. So both will become related party. They talk, standard talks about common control. Okay. Common controlling ownership, owners of a family. So they are also a related party. Now, standard specifically excludes the common control by a state government, state government, national government. They are not considered related party unless and until, okay, there is a significant share transaction or there is a significant control transaction between them. So common control excluding government as of now, understand. So tomorrow, all the PSUs have a common control of government of India. So all become related party. Answer is no by this definition. So unless and until there is a share transaction or some control transaction, they are not related parties in case of government companies, but otherwise common control or having significant influence will make that particular as a related party. Okay. Now, the important aspect of this standard is to understand the objective. What standards requires you to do? What is the requirement with respect to the related party? So, objective of auditor with respect to the related party transactions. What is the objective of auditor? Can anyone tell me is the objective to, remove all the related party transactions, or is
Sir,
the objective to, that there should be no related party transactions in the financial statement?
sir, first primary object is to achieve true and fair view of the present FRF. And
Yes.
second is fraud risk factor or any misleading.
Okay. So for that, let's say for example, to achieve the true and fair view, should I ask management to make the related party transaction zero? Like there should not be any related party transaction, otherwise the financial statement will not be true and fair view.
No,
Is it
sir.
so?
No, sir. Related party transaction should be properly identified and accounted and disclosed in the financial.
Yes. So the problem is not the related party transactions. Most of people have a conception like it's a related party transaction, there is something issue. No, related party transactions could be there. Related party transactions are not an misstatement, are not observations, are not issue. They do not impact on the true and fair view. But the way they are carried, sometimes it impacts the true and fair presentation. It may hamper, it may impact the financial statements, and they might not be able to achieve true and fair view. I'll explain how. For example, let's say a transaction with a related party. Let's say I provide a loan to the director of a company. As of now, don't bring the Companies Act and the provision of 186, 185. But let's say there is a company which is giving loan to a director. Two crores of loan has been given, interest free to director. Should I call it as a loan or dividend, and without any terms of repayment?
Sir, it's called as dividend, not the loan.
Yes. Now, here the related party transaction, which is disguised in the form of a loan, is impacting the true and fair presentation of my financial statement. So, related party transaction is not a problem. You can still show dividend given to director, no issues. But the way it has been shown is an issue. So, the objective of the auditor is always, okay, to obtain the understanding of the related party relationships and the transaction. So the first objective is to obtain understanding of related party transaction. I call it RPT, related party transaction. Obtain understanding of related party transaction and related party relationship. So that to recognize fraud risk, or fraud risk factors in that related party relationship or transaction. Second, to conclude whether financial statement, to conclude that financial statement are providing or achieving a true and fair view or true or fair presentation, and they are not misleading. This is to obtain the understanding. Now, the next part is to able financial reporting framework or not. So these are the two parts. First, to obtain, so that I can comment on these three. Second is to understand on the presentation disclosure. Now, the question comes is, what if the financial statement, or what if the FRF doesn't provide you the definition, still I am required to, let's say for example, there is no reporting requirement in FRF. Simple. Hypothetical example, I'll give you a hypothetical example. For example, partnership firm, which is SME and related party AS is not applicable or kindly exempted or exempt from application. You are auditing this particular partnership. Okay. Now, during audit, audit of partnership, there is no P&D requirement as per applicable FRF. During the audit, you understand that there is the partnership, there is no P&D requirement as per applicable FRF. Whether SA 550 will be applicable. Simple question.
Yes,
now,
sir.
whatever.
Yes, sir. Applicable.
There is no.
Sir,
Yes.
still we need to present our financial statement without misleading, and accounting for the related party has been done properly. So we need to follow the SA 550 and the partnership and SMEs also.
Okay. Anyone else? Any further answers or anything anyone would like to add? No? Okay. See, understand one thing. This is coming from your SA 240. Fraud risk factors coming from SA 240. This is your SA 200 overall objective. This both. Okay. SA 200. If these are coming from different SA, not from the, this requirement is not related to SA 550 itself, it is coming from different SA. It doesn't matter whether your financial reporting framework has a related party relationship or not. This particular part, irrespective of your financial reporting framework, will be applicable. Irrespective of financial reporting framework, auditor needs to verify. Simple.
Sir, then
Tell
my
me
question
why-
is,
Yes.
why do we need the separate standard for this SA 550? Because the thing is cover other standard also, SA 240 and SA 200, and why do we need for
Cost objective. SA 240. What was the need of 501 when you entry, like litigation separately? The overall standard on the fraud risk, overall objectives, audit evidence. But when it comes to the application to a specific area, you may need further standard or further guidance. And that becoming, or if I'd say this is a very critical area. That's why there was a need of a separate standard. Although you have an overall objectives, overall requirement in other standards, but there's a need of specific guidance on this particular topic. That's why you have a specific standard.
Okay, sir. Got it.
When you will read the bare text of this standard, okay, it refers SA 200 multiple times, no doubt in that. but still there is a separate requirement for some of the items.
Duplicacy of other standard. मतलब like same wordings are seen in the other standard also.
Yes.
So
For example, simple example, you might say written representations. There is a requirement in this standard in multiple standards to obtain written representation. And you have a separate standard which governs the overall requirement of written representation. You may question why, when we have a SA 580 written representation, why I need a separate particular element of written representation, like basic structure points, like what to do, what not to do. But when it comes to the specific scenario, whether that certain representation standard is required to apply in this specific scenario, yes, no.
Correct, or is something wrong with the examiner point of view? Because he only needs 550 concentrate, or I give both of the three of them's name, 3 or 4 applicable on that standard.
No, your answer will be incorrect. I tell you why. Let's say, for example, if the question is on the related parties, okay, I may refer within the answer itself SA 240, no issues. I may refer SA 315. But how, like, let's say today, fraud is there. 550, that the essay on the related party is requiring you to consider the fraud risk. That's why you are going back to the fraud risk. This particular standard tells you how to consider what. In, let's say, for example, not only the fraud risk, but how to consider the fraud risk. How to do testing additionally for the related party with respect to the fraud risk. So for that, he is also referring into the SA 240, but he is also providing additional information.
Okay, sir. The main highlight is 550, and the remaining descriptive is with 240 and 200. Okay.
Yes. Now, we will come to a point over there also. I will explain that how this adds up to the requirement which is already there in SA 240. But clear till here, objective of the auditor?
Yes, sir.
Okay, good. Now, we will understand each and every objective, what to do for each and every objective in detail. Now, the first objective was to understand the understanding of the RPT relationship and the transactions. Okay, so we will understand the requirement of each objective, like how to achieve the objective. The first requirement was understand RPT and related party relationships. Now, some of you may have an answer like, to understand the entities, related party relationship and RPT, we will apply SA 340 and 315, SA 315 and 240. So you will say apply SA 240 and 315. Perfectly fine. You are correct. No issues in that. Okay. You will say we will apply SA 240, that we will consider fraud risk factor. We will apply SA 315, that is understanding the entity. And under that, we will perform inquiries. Okay. As per SA 315. We will inquire of management. We will inquire of management. Perfectly fine. This is there in SA 315. No doubt. But what you will inquire, that is given in SA 550. You will inquire. That is there in 315. Inquiry you will perform. But what to inquire? What questions you will ask? What you will understand in that inquiry? That is something there. So matters of inquiry is your SA 550. That is, I would ask give me the list of related parties first of all. Okay, so identify, I will ask management identify related parties. Number 2, tell me the changes from the prior period. I'll tell you why this is important. Changes from the prior period will give you information on the related party relationships which will be new. For example, till last year, ABC Group was not a related party. Suddenly, management is saying, no, ABC Limited is a related party. You will have a doubt. Why ABC Limited is a related party? This was not there last year. Either you have incorporated new company or there is something more. Then management will tell you, okay, no, we acquired ABC Group. So why only ABC Limited? All the entities of the ABC Group now under common control. So you may get more information with the changes from the prior period in case of a related party. Okay, so understanding the changes will give you understanding of the related party relationships that may be new to the scenario. Okay, so understand the change. Then what you need to do is you need to inquire or identify the existing related party relationships. You may ask management, give me the list of related party relationships that you already have. Okay, so you may ask that list. For example, you may use last year's audit report to understand which related parties were disclosed in the financial statement. Last year's annual report or whole audit report with financials, you may check and you may get a comprehensive list of related parties. Then you may ask the entity to give you the ownership structure, governance structure, type of investment that is being made. Sometimes, type of investment is very important. Let's say, for example, they have the equity shares, but with preferential or differential voting rights. Or, for example, there is a company outside India, which is a holding company. Then there is one more holding company of that holding company. And, you have an ultimate holding company with a differential, with a, different type of investments or agreements. Or sometimes they even don't have the shares, but there is an agreement because they are the kind of, they have provided the financing. They are there was a startup, they provided the finance. They are the venture capital company. They provided the finance to the company for 5 years under a debt agreement, but they have such an agreement that they will exercise the control over the company, over the decisions and everything, because they have provided the money to the startup. So what kind of investment is there within the company? How it is structured, how it is financed? Okay, so how the relationship is there, type of relationship, ultimate holding, intermediary holding, fellow subsidiary, associate, joint venture, special purpose vehicle. There are a lot many things you even can't even imagine as of now, the complex structures as a company can have with the related parties. Okay, and sometimes, let's say for example, there is a common group. The common group acquired something in some different country which is not related to the India or Indian entity, and somehow from the next year that the group that was acquired by the ultimate holding company sitting in some other country, okay, and the group that acquired become your related party. So there is n number of combinations that is possible when it comes to the related party. So SA 315 might say you, okay, perform inquiries, but what to ask in inquiry? That will be given in SA 550. How to do inquiries. Okay, again, you may add up SA 600 in this work of another auditor. Now, let's say, for example, you are an auditor of a holding company. There are subsidiaries below you. So again, you might provide a list of related party to your SA 600. Under SA 600, you might provide list of related party to component auditors so that they can identify, okay, all these are related parties. Okay, so SA 600 might come into play, but again, that is specific requirement 550 that you need to share that information to the component auditor as a group audit. In case of a group audit, that okay, this is a group engagement. For group engagement, they have prepared the list of related party you may rely upon. Now that will not be there in SA 600. SA 600 says that as a principal auditor, my responsibility is to provide appropriate information. But SA 500 will 550 will specifically say you that okay, share this information to the component auditors also. Then you may, once you identify, then you need to understand the nature of relationship. Okay, between these identified parties, whether transaction was entered. Okay, so nature and purpose of transaction with related parties, that you also need to understand. Then you may, inquire management or others within the entity and perform risk assessment, okay, to obtain understand about controls around related party relationship and transaction. Now this is there, like again you will say this is this is similar requirement of SA 315, that you need to understand the entity and its control environment. But there are specific areas where you need to understand the controls. For example, controls around, now this is SA 550 specific, controls around disclosure of related party relationship and transaction, related party transaction as per applicable financial reporting framework. Then controls around approval and authorization of related party relationships and transaction. Okay, then again controls around related party relationships and transaction, but outside the normal course of business. Approval and authorization of related party relationships and related party transaction outside the normal course of business. For example, providing interest-free loan. So what is the control around such kind of outside normal course of business transactions? See, normal transaction with business related, perfectly fine. Selling of goods to related party, fine. Purchasing goods from related party, fine. Providing service, taking service, all that stuff, cross management charges, royalty agreements, and that is a normal business transaction, perfectly fine. But what if there are some outside the normal course of business transaction? Means renting the company property to director, providing interest-free loan to director without any terms of repayment, or you allowing directors to use company properties without any charge, or something similar like that. Okay, so any transaction or arrangement which is outside the normal course of business, which is done with the director or related party, for that you should have a separate controls to identify, to approve, to authorize such kind of transactions. Even there is a requirement of company set for the related party transactions. Can anyone tell me which section is there in the other company set?
Section 188.
Yes, there is one more, which is not directly on the related party, but is something similar.
For 279 और 177, I guess दोनों में से एक होना चाहिए.
177 is the audit committee.
Sir, 279, I guess.
279. 279, I think it is more of your winding up, stay of suits or something like that. No, it's not 279. It's stay of suits and winding up. I'll tell you. Your 188 covers related party transactions. But if you see 184 to 188, or even more beyond that, for example, 184 disclosure of interest by directors, 185 loan to directors. Loan to directors is also related party transaction. 186 loan and investment by the company, not directly related, but if it is in the related party, then yes. 187 investment of company to be held in its own name. Sometimes, director purchasing the investment on behalf of company. Then 188 related party transactions. 189 register and contracts in which directors are interested. Again, related to the where the director is interested, and there could be a related party transaction. Okay. So there are multiple sections which not directly, but somehow they require something specific with respect to the related party transaction. Now, if there is a specific requirement, let's say loan to directors, 185. So if there is a requirement of a Companies Act under section 185 plus 188, then you should have some mechanism in the company also where you are complying with section 185 and 188. Means there should be a process that before giving loan to director, someone should be checking the compliance with section 185 and 188. Okay, so there should be a process, there should be a controls around approving and authorizing the related party transactions. Okay, so this is with respect to understanding the related party relationships and the transaction. Although it is the application of SA 315 and 240, but beyond that, there are some specific requirements that we understood. Any doubt till now?
No, sir.
Okay, so if no further doubt, there is one requirement in SA 200, skepticism. I think we have heard this multiple times. Skepticism, professional skepticism. Have you heard?
Yes, sir.
Yes, sir.
What is professional skepticism? Can anyone tell me what that means? What is professional skepticism?
When the auditor gets more alert related to any audit of any transaction, and he use very sir, actually I didn't get the proper word, but
Can I say in a summary or short form that okay, maintaining alertness,
yes,
remaining alert?
yes, sir, yes, sir.
Okay, so remaining alert, maintaining professional
So
skepticism.
can we also use the presence of mind?
Presence of mind is, I would say, not that much alertness.
Actually, यानी वो word आपने जो अभी बोला ना अभी alertness, yes sir. वो alertness मुझे वो word याद नहीं आ रहा था, उसकी जगह ये याद आ रहा था, इसीलिए मैंने आपसे पूछा.
Yeah, but if I say professional skepticism, it is being alert to some specific scenario which may be pointing you something else, like a misstatement, something like that. SA 200 states be skepticism, maintain professional skepticism.
Yes, sir.
But SA 550 tells you how to maintain professional skepticism while understanding the related party transaction or while testing the related party transactions. So, requirement is nothing similar. Professional skepticism related only. Or in other words, remaining alert for related party transactions and relationship. But how to apply that? It will be there in SA 550. For example, what SA 550 says that during the audit, you need to remain alert. But how is that in particular, while inspecting records and documents, okay, look for arrangements or investments related details or other information that gives you existence of related party, or that indicates existence of related party relationship or transaction. Then let's say, for example, if auditor is inspecting some of the documents, okay, if you identify related party transactions not disclosed earlier, okay, related party relationships or related party transactions, if you get indications there is a related party relationships or transaction that has been not disclosed by management, in that case, what you will do? Okay, in that case, you may inspect some of the legal or third party confirmations. Okay, so let's say, for example, by reviewing the legal confirmation or third party confirmation, you may understand that whether, okay, is there any related party transaction which was not disclosed. Okay, so confirmations are one such area where you can get the idea about not disclosed related party transactions. Second is, you can say minutes of meeting. Again, from here also you can identify that existence of a related party transaction which is not disclosed. Or you can say, other records are also there which can help you identify undisclosed related party transactions. For example, loan agreement. Let's say in a loan agreement there is a guarantee provided by some other company. While that company will provide you guarantee, the first question is to come to you, is that a related party? Or guarantee provided by company has provided a guarantee to some individual. Why? So that will point you towards, okay, there could be a related party relationship between these two entities, or this could be a related to this person somehow. Appointment of any person on KMP, maybe he's a related party, maybe he's a shareholder. Okay, so appointment agreements, in you can say appointment letters. Sometimes appointment letters of managerial position can disclose a lot of things. Okay, so other documents can give you a good information about undisclosed related party transactions. Then if you, let's say, for example, when you are searching for related party transactions which are not disclosed by the management, and you identify also, okay, if auditor identifies related party transaction, related party relationship and related party transaction not disclosed by management, what you will do?
Sir, first we have to check the contracts or the transaction which related party transactions are happened is rational or unrational, or any misstatement is there. If my related party transaction is affect my audit, then disclose to the TWCG, TCWG, sorry, sir, and get written representations also, and document in my report also.
Okay. Anyone else? Something more to add? What I will do? If I identify a related party transaction which was or relationship which was not disclosed by the management earlier, what I will do?
So one more thing, I also check the intention of the management, why he hide that transaction from us.
Okay. Okay.
Fraud risk assessment I will do, and I will check that whatever earlier assessment was there relating to management objectivity and integrity, I would have to consider it again. And accordingly, I would also check the reliability of the management representation, if any, I have received earlier.
Okay. Very good. Yes. Any further thing to add? There is one thing which is being missed. The first step I will do that is being missing. That is missing.
Properly accounted for.
If auditor identifies related party relationship and transaction not disclosed by the management, what will be the first step you will do?
Obtaining evidence.
Evidence, that I will obtain evidence. That is for sure. I will obtain evidence, but I will do something that is related to me.
Proper authorization is given for that transaction.
So,
Communicate to management.
hmm,
Communicate to management why they have not.
half is correct. First, I will communicate to other team members. And if there are component auditors. Why? Because they are already testing some other areas. I identified a related party relationship or transaction. I will share information. This is also a related party. If you have a transaction, then test as a related party transaction. First of all, I will intimate to my team and other members of the engagement team. Then next step, I will go to management. Why you did not disclose? Okay. I will understand. I will ask the management why this was not disclosed by the management. Okay, understand the reason of non-disclosure by the management. The reason of non-disclosure by management. Okay, fine. Then I will ask or request management identify all the related party transaction with this new related party transaction, newly identified related party. So identify all related party transaction with newly identified related party, and that I will request to management. This is a request to management. Okay. And identify all the related party transaction with the new related party. Okay. And why controls around related party transaction and relationship failed to identify this. if there was a control around this particular area, then why the control failed? Whether the control is not appropriately designed or whether it is not appropriately operating, then I need to change the control reliance, then I need to change risk of material misstatement, then I need to test further because my reliance on the control is lesser. Reliance on the control is lesser, your risk of material misstatement will increase because that is a combination of control risk, inherent risk. Then if your control risk of material misstatement will increase, you need to test more samples, more substantive testing, TOD will be more. So you need to change everything. Then you need to perform procedures, as I said, need to perform substantive procedures, audit procedures to newly identified related party and significant related party transactions with that. So perform appropriate substantive audit procedures. Now, then you need to consider the risk. So reconsider the risk, including the risk of fraud. If you identify fraud risk, again, your risk of material misstatement will increase. You may need to perform some additional procedure for the fraud risk. So again, you need to consider or perform appropriate substantive procedures till the time you don't have sufficient and appropriate audit evidence whether the related party transaction which were not identified the management earlier are misleading, are impacting the presentation, true and fair view of the financial statement, whether they are disclosed as per the applicable financial reporting framework or not. So all that stuff you need to understand. Till the time you don't get sufficient and appropriate audit evidence for that, you cannot conclude. Clear? So if auditor identifies related party relationship and related party transaction not disclosed by management, then you need to do this. Any doubt?
No, sir.
Now let's say, if no doubts, then now let's say you identified, if auditor identified the related party transaction outside the normal course of business. Let's say if auditor identifies the related party transaction which is outside the normal course of business. Now, for time being, we will consider this as a disclosed by management. Okay, means management already disclosed this related party transaction, and we are now we want to now test this particular one. Already disclosed by management as of now. How will you test this particular transaction, or what procedures you will perform?
Sir, first we need to understand why this transaction is happened. Because what is the need for that transaction which is going beyond the normal transaction? And second thing is disclosed by the manager. Is appropriate or just I mean, sir, it's using our judgmental why this transaction is happened and what is the
Chances, yeah.
And third thing, sir, other evidence for audit which we need to justify this transaction, we obtain that evidence also.
Yeah. Very good. Yes. Anyone else? No. I'll explain. So first of all, what I will do is, if there is any related party transaction outside the normal course of business, I will understand business rationale for that. Okay. What is the rationale behind this transaction? Why you have to engage in this transaction? What is the need of this transaction? Okay. And assess fraud risk. And assess fraud risk factors in that. For example, giving interest-free loan. Is there something management trying to give dividend, but they are trying to report that as a loan? Is there something, window dressing kind of happening, or fraudulent financial reporting happening? Management is trying to, portray something as rosy pictures, but it is not the case. Okay. Then, second thing is terms of transaction. Terms of transactions. I will understand the terms of transactions. There are two things to understand with the terms of transactions. Whether they are consistent with rationale. So let's say management gave me a rationale. We have to perform this transaction because of this reason. Let's say XYZ reason, whatever. Now you need to understand that whether the terms are appropriate. Let's say, for example, management gave an interest-free loan. Management gave you rationale. No. We perform this kind of transaction. We give interest-free loan to each and every director. You check the terms and condition of the transaction. Not with this, but all the directors. Whether loan has been given to all the directors, and you identify no, only loan has been given to a director who is a majority shareholder also. Not matching with the terms. Terms not matching with the rationale. No. Then there is one more requirement. Basically, this is the requirement of Companies Act specific. This is Companies Act specific requirement. If someone can tell me. We usually check this. Specific in the Companies Act that is required to check.
Sir, special resolution has been passed, board's approval needed. You talk about this one, or
I'll give you section 143. This kind of requirement is there in the CARO also. So it is kind of the proprietary nature. Remember, multiple instances we discussed whether the transactions entered by the company are in the interest of the company or not, or are they prejudicial to the interest of the company. Okay, so transactions prejudicial to the interest of the company. That means they are not in the interest of the company, but they are in the interest of the person or the related party. Transaction prejudicial to the interest of the company. For example, company was not having funds to give the loan to director. So company went to market. They took the loan from bank on a very high interest rate, and that loan was provided to director as an interest-free loan. Now, this particular transaction is a prejudicial to the interest of the company. So, are these kind of transactions present, which is in the favor of the related party but harmful for the company? Okay. So, in section 143(1), we have a proprietary nature included. We will see later also, but this is kind of proprietary nature. So this is on the decision making of the company. Then you may check whether this particular transaction is appropriately disclosed. Appropriately disclosed as per applicable financial reporting framework, and then appropriately authorized. Appropriately approved and authorized. So I will check all these things for the transactions which are the outside of the normal course of business. And one last thing that I will check, if management has anywhere in the financial statements, if they are saying that the transactions are conducted on the arm's length basis, then I need to obtain sufficient and appropriate audit evidence for that also. If the sufficient arm's length basis assertion is present, okay, assertion that related party transactions are on arm's length basis, in that case, okay, auditor's responsibility is to obtain sufficient and appropriate audit evidence to evaluate this assertion. Now, can anyone tell me what is this assertion that the RPT is on arm's length basis? What is this assertion about?
Arm's length transaction means if the transaction has been happened with the party which is not the related party transaction, the what terms and conditions will be there are the same with the RPT. Then we will say that it is at arm's length transaction. Let's say if the price is quoted to the person which is other than RPT is same as the price that is quoted to the RPT, then we will say that it is a arm's length basis.
Yes, absolutely correct. Very good and appropriately explained. So if the management says that no, we conduct the transaction with related parties on a similar level, we conduct the transaction with the non-related parties, that is the arm's length basis or arm's length transaction. In that case, auditor has to evaluate that assertion and needs to perform additional audit procedures to evaluate that particular assertion. Like what is the price charged to non-related party, what is the price charged to related party, whether both are same or similar lengths or not. So the auditor needs to evaluate that. If management is saying that the related party transactions were conducted on terms equivalent to those prevailing in an arm's length transaction in their financial statement, then yes, auditor has to test. Clear? So this was, yes.
No, sir. Actually, ऐसे ही press हो गया था.
So this was your essay 550, related party transactions and related party relationships related requirements for the audit. Any doubt with overall essay 550? Any doubt? No? If no doubts, let's quickly go through the study material of essay 550 and then we can, close this particular chapter 5. So essay 550, again, you have a responsibility. They specify that scope is nothing but essay 315, 313, how that to be applied in relation to related party relationships and transactions. How I need to apply 315, 240, 330 in case of related party transactions. Again, we have discussed the objectives of the auditor in detail. The objective is to recognize fraud risk, conclude that financial statement achieved true and fair presentation, or not misleading, and obtain audit evidence with respect to properly identification, accounting disclosed in the financial statement of related party transactions. Then requirement of essays that we understood, that is risk assessment, understand entity, maintaining alertness, professional skepticism, sharing information with engagement team, again risk of material misstatement with related party relationship and transaction, and response to risk of material misstatement that you need to create as per SA 330. Identification of previously unidentified or undisclosed related party transaction. So if you identify, communicate with the team, then request management to identify all transactions with these parties, perform substantive procedures, reconsider risk, and reconsider the intentional risk of fraud risk of that management has intentionally not disclosed. Then related party transaction outside the normal course of business. So for that, you need to understand the rationale, the terms, properly accounted for. You need to obtain sufficient and appropriate audit evidence regarding authorization and approval of the related party transaction, and other points. Other points basically written representation that you need to obtain as per SA 580, communication as per SA 260, and documentation again SA 230. Sorry. Okay, so these are certain points, and this is the SA 550 related parties in your study material. Any doubt? Any doubt? Okay. If no further doubts, what I will suggest everyone is that in your study material, you have a good understanding, a good questions, case studies, everything is given beyond that, the charts. Okay. So if you see, you have a theoretical questions, their answers, everything is given in the study material. Okay, after this chapter. What I will suggest everyone is to go through these questions. Try to first answer in your own words and then go for the answers which are given in this particular study material, so that you can understand that where you are lacking when you are trying to write the answer. Because see, understanding the answer is one thing, writing the answer the way it is required is another thing. For that, you need to have a writing practice. So I would request everyone to go through this particular part, theoretical questions which is given in this particular chapter, case studies which are given in this chapter, and try to solve by yourself first, and then to then to see the answer which is given here. Okay, so this is your chapter number 5, audit evidence. Thank you for participating in today's session. In next session, we will be starting chapter number 6. So that for that, you have to study chapter number 6 from the study material, so that you can ask queries and participate in the session the way you did today. Thank you, Pooja. Thank you, everyone. I will see you in the next session. Thank you, guys.
Thank you, sir.
Thank you. Thank you. Yes. Good night.